Well, central bank's gold strategy reveals a great deal concerning the future price of gold. But will markets, investors, and more importantly, will we pay attention? That's what we're going to dig into in today's video. So thank you for joining me. Hope you are doing well. I'm Ric Bender and welcome to Finance Lab. Many times in previous videos, we've discussed how central banks had purchased and were holding gold. It's important to note that central banks are continuing to buy gold and holding gold even at these all-time high prices. Now, many people say that gold price has peaked. But I ask you, would central banks be continuing to buy gold if the price of gold has peaked? Now, maybe they would if they knew that the financial monetary collapse is happening tomorrow, and in that case, you better buy gold right now. I don't believe that the price of gold has peaked, nor do central banks. In fact, their gold strategy reveals that the price of gold has a long way to go. Now, whenever I talk about the price of gold, often people will say it's way too expensive. And I will answer those comments with a question. Compared to what? If you think gold is too expensive right now, then the logical question is compared to what? This is what the market's not paying attention to. This is what investors aren't paying attention to. And this is what you and I need to pay attention to. The central bank's gold strategy is revealing to us that gold has a long way to go because they're comparing the price of gold to M2 money supply. And when one does that comparison, we realize very, very quickly that gold is cheap. Now, I would rather, if you shared in the comments that I'd like to buy gold, I just can't afford it. Then I could share some truth with you concerning silver. Why not start with silver? Silver is extremely undervalued and it is very inexpensive. It is a store of value. It's a hedge against inflation. It is industrial metal. It's radically important when it comes to industrialization, electrification, so on and so forth. Why not start with silver? Why not be honest and say, I'd like to buy gold, but I just can't buy gold? Don't take the easy road out, saying gold's too expensive. Because, quite honestly, what are you comparing it to? Here's what we need to compare the price of gold to. The M2 money supply. This is what the central banks are comparing the price of gold to. And when we make this comparison, and I'll show a chart in just a moment, you will see the divergence of what gold should be when we look at M2 money supply in a particular year ratio. The price of gold has a lot of room to go. Now, these are possibilities. Nothing is for certain, but we learn from central banks or we will ignore the lesson and quite honestly, not realize how vital gold is to preserve our wealth, to protect our personal balance sheets. Central banks are buying gold because fiat is collapsing. Debt is skyrocketing. And they want to shore up their balance sheet. They want to preserve their wealth as well. And this is the role that gold plays. But if you're going to take the easy road out and say it's just too expensive already, assuming the price is going to collapse, you're missing the point. In fact, we're missing the lesson from central banks. They are buying gold, continuing to buy gold, even though we are at all-time highs. Why? Listen, since March 2020, the Federal Reserve has created, out of thin air, $6 trillion in new money. This is beyond massive. In fact, it's so big, it is difficult to articulate how to express how I feel. The problem is, trillion has become just something that we just state all the time. What's a trillion? Who cares? No big deal. $6 trillion. Now, look back at our history of putting money into the system. That's a 40% increase in M2 money supply and more dollars created in 4 years than in the previous decade combined. 41 plus year inflation in 3.5, let's say 4 years. And M2 money supply is continuing. The commitment that we have from the Fed to lower interest rates is a commitment to print more money, to put more money into the system. And so the central banks are seeing this, realizing that gold's price is cheap compared to M2 money supply. Let me show you a receipt. Let's look at this chart. If gold matches its 2011 money supply ratio, then we're looking at a gold price of about $4,400 per ounce. If gold matches the 1980s ratio, then gold should be around $9,700 per ounce right now, using those two ratios to M2 money supply. In other words, gold is just catching up. The market isn't paying attention. Investors aren't paying attention, but some are beginning. This divergence, when you look at a particular year and money supply gold ratio, is telling us that gold is trying to get caught up. Central banks know this. It's the market that doesn't. It's investors that don't, other than a few. In fact, this is the proof in the pudding. The professionals are loading up. Professionals are pouring into gold. In fact, long positions to short positions, professional money managers are 5 to 1. 5 to 1 long positions. Look at this chart. Money managers are bullish on gold. Why? Because of what's happening with money supply, what's happening with interest rates as they begin to decrease. This is the economy that we're dealing with. Professionals realize they need to run to gold for the protection. And not only for the protection, but also realizing the price is really cheap compared to M2 money supply. This is the story that people aren't paying attention to. The central bank's revealed gold strategy is telling you and telling me that gold and its future price is going to continue to climb. And this great bull run of gold really is just in its middle stages, because money is continuing to be printed out of thin air, even though we have this 40% massive money supply in this short 4 years. This is insane. The economy here is extremely volatile. Interest rates are dropping. Debt is increasing. And quite honestly, gold, more than likely, will be rising. And don't forget, silver will take advantage of that gold bull run. So don't say gold is too expensive, because compared to what is the right question to ask? Eventually, you're going to have to answer that question, compared to what? It's one thing to admit you can't afford it. It's another thing to clearly state you don't understand the market. You don't understand what central banks are doing. And this is why we talk about central banks holding and buying gold so often, because this tells the story about the necessity to own gold, to preserve wealth, and the role that gold plays in economies and monetary policy resets and collapses like we're heading into. So thanks for joining me today. Appreciate you spending time with me. If you like what we're doing and you haven't subscribed to the channel, consider subscribing to the channel. You may also want to share this video with a friend, and if you like it, don't forget to like the video. It does help us reach more people with this important truth about wealth preservation. Thanks again, and I'll see you next time.